Welcome to a new update, a new video in which today we're going to talk about Bitcoin's price action. We've had an interesting week last Friday in which we reached 25.9k. Now price is back up to 27.3. So are we actually in the case where we're going to continue the trend upwards, which I've been mentioning before? That's what we're going to discuss in this update. But before we continue, make sure to hit the like button, subscribe to this YouTube channel. Also check out my other channels, including my public Discord, where you can get in touch with other traders, get some trade ideas as well once every 2 weeks, get 1 week access to the premium platform and more. Also make sure to whitelist yourself for our course, which is planned to go live on July 1st, which is an all-around beginners course or intermediate course, which is about crypto on every aspect of crypto. Now, when we're talking about the things that are happening in the markets nowadays, I think when we look at TA, there's a crucial level that we would have been holding, right? We should have been holding above 25k, which we technically are at this point. So we're going to discuss that in a little bit. But when we discuss the news topics, there are a few important ones we should be mentioning. And I think I've got two topics to discuss with you, as there are also some questions about this topic overall. First one is the fact that the US Department of Justice has emphasized that the scale of crypto crime has grown significantly over the past 4 years, and as a result, the agency is looking to crack down on illicit behavior involving digital platforms. Nothing new. We already know that the US is cracking down most of the exchanges, but also targeting the rest of crypto. But now it's just coming out in which we are seeing that there are public statements on this. There was another statement from Eun-Young Choi, the director of the National Cryptocurrency Enforcement Team from the DOJ. They have recently revealed that the agency is targeting crypto exchanges, as we know with the stablecoins attacks. They are eyeing companies that commit crimes themselves or allow them to happen. It's also targeting mixers and tumblers that conceal the trail of transactions, in which we also know that in Amsterdam we've had the Tornado Cash arrest, right? So nothing really new. It is in the end all FUD, because the US really wants to create their own stable currency. The US wants to fight their dominance in the monetary global world, in a sense that they want to create their own US dollar in a digital form, and they simply don't want crypto to become large, as right now the US is losing its power, as we also know from the other updates when it comes to macro. Now, when we are going to talk about macro, on Thursday we're going to discuss the US default situation, but I will already address it in this update because it is such an important update to discuss. The question is, are we going to see a breakdown of the markets of crypto if the US is going to default? That is the most anticipated question that I'm getting on social media at this point. What is the US default in the first place? It is the next hype topic that we're looking at, because the previous narrative is gone. So we're looking at the next narrative. And we also still have the Fed, of course, but the US debt limit is an important one. And the question remains, is Bitcoin going to fall based on that news? And I think I've been getting into this topic previously. If Bitcoin has been trending down for a year, every relief rally upwards is an argument for bears to still continue to believe that the bear market is there. And we should be realizing that we're still up 90% since the all-time low, or at least the cycle low, in which FTX collapsed, in which Celsius collapsed, Voyager collapsed. Even though interest rates have been going up from 0% to now 5+%, and Bitcoin is up 80%. So you should realize that the valuation of Bitcoin is still relatively low, but also starting to trend upwards. That even if there is an outlier, the most likely case is that the bottom is in. So then the question remains, is a US default going to influence the price of Bitcoin? Of course it is. But first we have to discuss what a potential default means, and when we are going to hit it. So first of all, if we're discussing a default, The US government will begin defaulting on its payment obligations between early June and early August without an increase in the federal debt limit. Also, Janet Yellen, who is the US Treasury Secretary, warned approximately 2 weeks ago that a default could come in as early as June 1st. This time it's different because we have already had one in September 2021. How did that be solved? Well, they just raised the debt limit. And now we are looking at a case where it can hit 31.4 trillion. Economists warn that a lengthy default could send the US economy into a deep recession with soaring unemployment whilst destabilizing the global financial system that is built on US bonds. So it's going to impact the entire world. Already investors are bracing for impact, demanding sharply higher yields on Treasury securities that mature in early June. Then we're discussing about a think tank that they are analyzing that weak revenues during the spring tax filing season have been exacerbated by payment delays granted to taxpayers in some severe storm disaster areas, including much of California and certain counties in Georgia and Alabama. So it is a critical period, and it looks like we're going to have some serious issues here. So yes, it's going to influence the price action of Bitcoin, but ultimately, the fact that the Fed has been increasing the interest rates or the federal funds target rate is backfiring now on their own, because they have to pay a higher pay higher rates and payments on their own debt, which means that most likely at some point they are going to lower those interest rates, because if you have a large amount of debt, the last thing you want to have is that your interest rate goes up, right? So, in the end, what we are looking at here is that they want to increase the tax revenues as well. We have been seeing some statements from Biden that they are increasing the taxes. And if tax revenues allow Treasury to meet obligations through mid-June, quarterly estimated tax payments due on June 15 can likely float the government through June the 30th. This means that we can postpone the entire debt limit, but at some point it needs to be raised. And I think at some point they have to start paying their own debt back. And it is, if you think about it, it's just insane that you just raise your debt limit instead of just going bankrupt. Every other company goes bankrupt if they don't meet their debt payments. If I'm not doing well and I have to repay my debt, at some point I need to pay the bills. And the US doesn't. That's different. That's strange. That shouldn't be the case. So this is something we are focusing on in the coming period. I'm going to discuss this into my video of Thursday as well. They are going to look at a potential increase of the entire case. And so what is going to happen? Well, if the US government bonds underpin the global financial system, so it's difficult to fully gauge the damage a default will create, but executives expect massive volatility across equity, debt, and other markets. The ability to trade in and out of treasury positions in the secondary market would severely impaired. How are institutions preparing at this point? Banks, brokers, and trading platforms are prepping for disruption to the treasury market as well as broader volatility. This generally includes game planning how payments on treasury securities would be handled, how critical funding markets would react, ensuring sufficient technology, staffing capacity, and cash to handle high trading volumes, and checking the potential impact on contracts with clients. So there are several scenarios also being discussed in this article. We're going to discuss that on the video on Thursday. But yes, it will impact Bitcoin's price action. You would say if the US goes bankrupt, that is going to give a bad response to Bitcoin in the first place. I think maybe it could. If there is going to be a liquidity crunch, which means that investors need to rebalance their portfolio, which is institutional investors, as the markets are falling down, ultimately that would lead into a case where Bitcoin will start to fall too. Long term, people will start to opt out and still buy Bitcoin. So you can get a similar reaction to what we've had with the banks falling in March. Initially, we saw Bitcoin dropping down, and after that, they bounced up quite substantially. If there is a case that the debt limit gets raised, then everything is party time. They raise the debt limit, which is essentially QE, which means that inflation will start to stay here at a higher level, which also means that stocks will probably start to do well as they release the entire fear, which means that Bitcoin will start to do well, and we continue with the bear market relief rally until reality starts to kick in which we saw some data yesterday on that already, with the Empire State Manufacturing Index being worse than expected and unemployment going up. So that's the case right now. In the end, I think that how should you be preparing? Take it slow. Now we're going to look at the charts, and then we can see which levels are important to watch, as we have been discussing this previously too. So essentially, when we talk about price action when it comes to Bitcoin, we have the same conclusions still, which means that we've had this price action of Bitcoin going downwards since the previous all-time high, in which we were making lower highs, lower lows, definitely confirmation over there, which is fine. We're acting beneath the MA 100, we're acting above the 200 MA, and we're acting above the 200 EMA. And I'm adding these in because those are important to keep an eye on. What do I mean with that? Is that it's what do we see in the structure here when it comes to Bitcoin? Well, the following. We've had a case where we have been rejecting into resistance at 30k, right? So we have been going into resistance here. Those two areas are important to keep an eye on. It's very similar to the area that we've had at 6k. Couldn't really break through it, but we are acting above these two, in which we are most likely going to sustain, which could also give an argumentation that this area was the cheapest area to buy Bitcoin until date, because usually it doesn't go beneath 200 EMA and 200 MA. In that sense, if you're looking at the price action of Bitcoin, we are facing the crucial resistance, we are holding crucial MAs and EMAs, and as long as we do, it is just fine. We are just having a pretty normal corrective move on the markets. And I think the real trouble starts to kick in once we are going to lose the level that we have here with a weekly close, right? Once we start to lose the level at 25 or 24.6k, that is when the real problem starts to kick in. So this entire region that we have here, and I'll just make it blue, this entire region is the must-hold area. If we dip into here, it is still an area that I would prefer to have longs with. The only issue we have is that we're losing the 200 MA and the 200 EMA. So this corrective move based on the higher time frame price action is fine and ready for continuation, because we also know that during bear market relief rallies, we usually tend to go to any of these two levels. If we go back in time and we're looking at the 2019 case, we've already seen the exact same taking place here, in which we have been seeing a bear market relief rally towards the 3.5 here and towards the 0.5, right? So we've got into that region and we started to accelerate. In that way, we are still not done, which means that unless we're going to have a big outlier, which I don't think we will, we are looking at a continuation play here as we are holding the 200 MA and we are holding the 200 EMA, and we are making higher lows, most likely higher highs. So if we're going to have a higher low taking place here, which we have to confirm on lower time frames, it is very likely that we're going to attack the highs again. And then the question will be how strong we will be breaking out through it. If it is going to be strong enough, we are most likely going to continue moving towards 34k. I deleted it. At 40k, right? So then these targets are pretty much the same as I've got it on the higher time frames. That is what I'm looking at when it comes to the higher time frames. If we're looking at the lower time frames, it is pretty much, this is still pretty much the same view as last week, so I'll just use that. If we're looking at the lower time frames, on the daily structure for instance, I've been mentioning a few of those levels here. I'll just erase it for a little bit. But what did we see? Well, we did see that we rejected at 30k, couldn't really break through it, and we started to retest the range low. Technically speaking, we have been taking all the liquidity here And on the other hand, we've also been looking at a case where we must be retesting 25k, as that is essentially the level that everyone was focused on for a potential retest. I think there are two arguments. If that level gets a retest, we nosedive through it. If that level doesn't get a retest, most likely we will bounce higher than that level because markets are strong enough. In this case, if you go back in time, we've had a beautiful retest here, but then once we came back to this region, we started to cascade through it to take the liquidity and reverse. So if we're going to have a test here, I think, and we turn around, I think we're going to go somewhere here to take the liquidity beneath this low. Then I'm looking at this play. What do we want to see in that case is that we have a bear market relief rally here again. We get towards 28.6, reverse towards the lows, and then we're going to have this continuation taking place. All right. However, if we're looking at the price action of Friday, Friday gave us this big wick, and after that we are reclaiming the previous lows, which means that there is a likely conclusion that we're going to continue moving. And that way we are facing some crucial resistance zones here, which is important to keep an eye on. But as long as Bitcoin stays above this region, which is the area 27.1, this region, we are most likely going to continue moving towards 28.8 and 30k. Very simple. And I also mentioned that, but we'll discuss this on the Saturday update, altcoins are closely getting there. But this is what I want to see with Bitcoin. We swept the lows, reclaimed here, as you can see on the lower time frame. So we've got this downtrend, right? We've got rejection at 29.8, rejection here, another rejection. Essentially, we fell beneath here and started to reject again. Another rejection, sweep, taking all the liquidity, bounce back up, reclaim, another reclaim, targeting or cracking resistance level. Now you clearly want to see this level hold, and then we can continue moving. That's essentially what I'm looking at. If the other scenario is that Bitcoin doesn't hold this area, and then yes, we're going to look at a case around 25k. Not optimal, but that's what I'm looking at this point. So what would I play? I think that I'll be looking at longs overall at this point, especially as we have been bouncing by approximately $1,600. And if we lose the level, then I'm looking at lower zones. Still the same case. I think that we're still continuing the upwards trend, but we clearly want to have a definite continuation pattern here. I hope you have enjoyed this small update on Bitcoin. I'm back on Thursday when it comes to macroeconomics. Make sure to hit the like button, subscribe to this YouTube channel, and I'll see you again soon on Thursday.